Hello, everyone, and welcome back to Everything Tesla Stock. Did you know that a senior investor declared that the present price of Tesla is a once-in-a-generation opportunity to buy? The fact that so many well-known people have said it may make it sound cliché, but Tesla's current pricing is a once-in-a-generation opportunity to buy. The biggest investment firms have split between Tesla supporters and detractors. Known as the leading EV manufacturer, Ron Barron is a well-known investor and evangelist for Tesla. Today, you're going to see why Ron Barron claimed that buying Tesla shares at this price is a good investment. It may even seem like a marketing ploy to get people to buy Tesla shares. To learn what Barron has to say about all this, you better pay attention and keep watching. I observed an annualized inflation rate of 8.6, the highest in more than 40 years. The Federal Reserve's benchmark interest rate increased by 75 basis points as a result, which was the greatest increase since 1994. Due to soaring inflation and strong central bank tightening, the stock market had its worst single week since the economic crisis began. A replay of the late 1970s and early 1980s, when comparable inflation and high interest rates led to market sluggishness and a catastrophic recession, is now pessimistically predicted by economists. Expert opinion suggests the likelihood of both inflation and a global recession is as follows. Compared to price cuts brought on by the general market slump, which may give opportunities to buy premium brands in failing industries, long-term investors may not perceive this situation to be as dire. The billionaire investor Ron Barron believes that the current market is a once-in-a-generation opportunity to buy. Ron Barron is well known for sharing alpha via his Twitter account. Bear markets for stocks have begun. Barron argues that this is a once-in-a-generation buying opportunity and that there is a great possibility for people to take advantage of it. Ron Barron, the founder and CEO of Barron Capital, stated in an email to Kemp that although the S&P 500 has dropped to its lowest level since late 2020, the current sell-off in major U.S. equity indices really presents a great buying opportunity when considering the economy in the long run. 1982 saw the launch of Barron Capital. Barron contrasted the current situation to the beginning of his professional career, noting that the early 1980s was another time when markets crashed due to an aggressive Federal Reserve trying to control inflation. He also said that his two investing kids now have equal chance. He did this by founding Barron Capital, an investment management firm with headquarters in New York City and a reputation for long-term investing strategies. In 1982, the year the Dow Jones Industrial Average reached 880 during a bear market. Wall Street uses the term bear market to describe a stock market loss of at least 20% over an extended period of time, which frequently indicates an economic downturn. According to a financial content website Seeking Alpha, the most recent bear market started on February 19, 2020, and ended on March 23, which was a little over a month later. The stock market recovered later that year and stayed strong until 2021. But this bear market only lasted 33 days and was primarily caused by the consequences of COVID-19. The nation had never experienced an economic crisis as severe as this one. The Fed investor argued that a strong tech foundation that has been established over the past few decades supports the current economy and points the way to substantial upside potential over a significant amount of time. If you haven't already, tell us below in the comments if you would purchase Tesla shares. In response to yet another catastrophic sell-off on Wall Street, Barron cited Tesla and other companies as examples of the kinds of enterprises that might spur the ensuing wave of technical innovation. The fund manager talked about investors' worries that the Fed's rate raise program will eventually cause a recession, which caused the S&P 500 to drop by more than 3% on Thursday and the Nasdaq to drop by more than 4%. The S&P 500 has now lost more than 23 points in 2022, and it finished below 3,700 for the first time since December 2020. Although Barron has a long-term bullish outlook, there has recently been more worry about a potential short-term recession in general. Despite this, we remain optimistic and don't often focus too much on immediate issues like inflation and oil prices. The war between Russia and Ukraine and interest rates, although it's a constant concern, I've never heard many people in my lifetime discuss inflation. According to Barron, the average annual rate of inflation is between 4 and 5%, or nearly doubling every 14 to 15 years. The stock market doubles every 10 to 12 years, or roughly 7 to 8%, according to Barron's prediction, which broadly echoes the suggestions and emphasizes long-term investing rather than day trading. The investor also referred to the financial advantages of compound interest growth. Picking stocks that are destined to increase in the future, even if they are currently declining, is the current dilemma for investors. Sylvia Jablonski, Chief Investment Officer with Defiance EFT, voiced her optimism after learning that inflation had reached a 40-year high, echoing Barron's remarks. Future generations have a wonderful chance here. This will all seem like noise when you look back on it. Squawk Box continues to caution that though investors are expected to experience range-bound volatility in the short term, the upcoming months will be quite unpleasant for them. She emphasized that even though it is terrible, if we can just get through it, everything will be fine. Some people might be interested in learning how stock market profit is made. Stock markets have created affluent investors for more than a century. In the stock market 50 years ago, a $10,000 investment could have generated a portfolio worth hundreds of thousands, if not millions of dollars. Stocks returned 10.5% annually on average between 1957 and 1921. Yet company-specific factors can greatly affect capital appreciation. There are other ways to build wealth over time, and while investing in the stock market has historically been one of the most successful strategies, there are other possibilities. This 10.5% yearly growth rate is known as the CAGR, or compound annual growth rate. Investors can often use one of two strategies to make money in the market. Historically, the first strategy, buy and hold, has led to the exponential growth of investment capital. Investors can benefit from this strategy in two different ways. Gains in value and dividends. Capital appreciation is the increase in value of an asset over its acquisition cost, such as a stock or mutual fund. Before the contract is realized, capital appreciation is not taxed. At that moment, it is referred to as a capital gain. On the other hand, dividends are a crucial way for shareholders to get paid for buying and keeping equities. Dividends are regular cash payments paid to shareholders by firms when they are profitable. In addition to the buy and hold strategy, it pays out a portion of its income as dividends to shareholders and keeps the rest as retained earnings. Leveraged equity trading can be profitable for investors, and other tools, such futures, can be utilized to increase the profits from their wagers. Options are a great alternative to futures because they give the contract holder the right to buy but not the obligation to buy or sell the underlying share, whereas futures require both parties to buy and sell the stock. However, investing is risky in and of itself, so you should spend enough time and effort researching the stocks you are interested in short sell. Risks and chances for more Tesla stock content are there in Tesla too. Click on one of these two videos on your screen while you're here. Hello there.